Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Danish bin Azman.
Raja, my name is Muhammad HAZIQ bin ROZAMI IZUAN.
Assalamualaikum, my name is Muhammad IZHARUDDIN bin ZULKIFLEE.
So before we proceed with the presentation, I would like to clarify here that our sources for this presentation mainly consist of MFRS 8, MFRS 134 as issued by MASB. So I'll first briefly explain on MFRS 8 that specify about operating segment. So what is exactly an operating segment? This is what the standard says, yada yada yada. But if we're about to simplify the standard definition, we can simply say that operating segment is a component of company that earn revenue and incur expenses from business activities. And the second phrase of the definition imply that results of this segment are reviewed by the entity CODM to assess the performance and also allocate resources. And as for third phrase, it simply means that the company keeps separate financial record for that segment. Lastly, for your information, even a new division that has not earned revenue yet can still be considered as an operating segment.
So when we talk about CODM, who do you imagine hold this important role? Is it a CEO or director? Let's clarify that. This is what the standard say, and it is important to understand that the CODM is a function, not necessarily a manager with a specific job title. Their responsibility is to allocate resources and to assess the performance of the operating segment. Therefore, whilst this person is often the company's chief executive officer or chief operating officer, it also could be a group of executive director or others. To make this clear, let's take a look at two examples of CODM in Malaysian public listed company. At Maybank, the CODM is the Group Executive Committee of the bank itself. This is proven in their financial reporting, where they stated that the group has determined Group Executive Committee of the bank as its CODM. While at Genting Berhad, the CODM key executive leader, namely Deputy Chairman with Chief Executive and the Group President with Executive Directors.
Under FRS 114 issued by MASB, it is stated that MFRS 8 can be a business or a geographical segment. But what exactly does that mean in practice? Let's break it down. A business segment is a part of a company that focuses in providing a specific product or service. In contrast, a geographical segment relates to a company operation in a specific economic environment. Let's take a look at two examples of CODM in public listed Malaysian companies. Petronas Chemicals Group Berhad segmented its operation into business segment. Therefore, as you can see, in their financial statement, they segment their revenue into the continuing operations. As for Public Bank Berhad, they demonstrate a geographical segment report as it categorizes its operating revenue, profit and assets by different regions including domestic, which is Malaysia, Cambodia and Hong Kong.
Let's now discuss about specific benefit that user might receive from detailed segment information. And as you can see here, the benefit are the ability to better assess the nature and financial effect of business activity and the ability to understand better the economic environment in which entity operates. Let's go deep into first benefit. To better understand this benefit, let's take a look at Sam Dalby Berhad segmental report. The company divides its operation into four segments: industrial, motor, UNW, and corporate and others. By examining this segment, we can immediately see that the industrial segment is the company's main profit engine, delivering a strong and consistent profit of 1,407 ringgit million for 2024. Meanwhile, the corporate and other segments show large fluctuation, including a loss in Q3. This tells us that certain activity at the group level face uncertainty and cost pressure. The second key benefit is that it gives user a deeper understanding of the economic environment in which the company operates. A geographical segment report makes this very clear. Take a look at Sam Darby financial reporting. The group profit made healthy with an increment from 2,084 million to 2,758 million, but China experienced a major downturn, moving from a profit of 453 million ringgit to a loss of 116 million ringgit. For users like investor and creditor, this is extremely valuable. It shows that company isn't operating in one uniform market, but in multiple economies, each with its own opportunity and risk. Segment reporting allows users to pinpoint which regions are booming and which are struggling, made it much easier to forecast future performance. So, overall, segment information provides clarity, transparency and a deeper understanding of the business, something that consolidated financial statement alone cannot fulfill.
So, for the next part of this presentation, we're going to move into MFRS 134. As the standard defined, MFRS 134 is a financial report prepared for an interim period that is shorter than a full financial year. The financial report can be prepared bi-monthly, quarterly, and semi-annually. Company is not obligated to prepare interim reporting. However, Bursa Malaysia listing requirements require that all listed company to lodge quarterly report not later than 2 months after the end of each quarter. To illustrate, if a company financial year ends on 31st December, company is required to submit the quarterly report for quarter 1 latest by May, which is 2 months after end of first quarter. Now, you might wondering, why do companies still need to submit interim reports when they already have annual reports? MFRS 134 specifies that interim reporting is crucial as it enables users such as investors, creditors, and others to understand entity's capacity to generate earnings and its financial position. However, some companies refuse to do so because interim reports are not audited and preparing them may involve additional costs. So, MFRS 134 stated that an entity shall include explanations of significant events and transactions in their interim report. Now, the keyword here is significant because users already have access to the company's latest annual financial report. Therefore, insignificant event will be unnecessary to be disclosed. The significant events may include acquisition and disposal of PPE and litigation settlement. Let's take a look at example by using Mfrs interim report. For acquisition of PPE, it is mentioned that the company acquired PPE amounting 109 million ringgit during the period. For material litigation, it is stated that the company filed a legal action in Australia on 31st March 2021 and on 11 April 2025, court released a judgment in favor of defendant and the group has lodged an appeal against the decision.
Lastly, to answer this question, we can illustrate the period by referring to interim financial report of Mfrs Berhad. As you can see, the company clearly stated that the second quarter ended on 30th September 2024 and financial year ends on 31st March every year. From here, we know that second quarter is between 1st July to 30 September 2024. So these are the periods for which interim financial statements are required to be presented. For SYAFINAZ, we must compare current period with latest audited SYAFINAZ. Therefore, the comparison will be between SYAFINAZ as at 30 September 2024 with SYAFINAZ as at 31st March 2024. For SOPL and OCI, we need to make two comparisons. We must compare them between current previous period with previous interim period and cumulative current period with cumulative previous period. Remember, the rule is to compare apple with apple. Therefore, comparison will be between SOPL or CI 3 months ending on 1st July to 30 September 2024 with 1st July to 30 September 2023 and 6 months ending between 1st April to 30 September 2024 with 1st April to 30 September 2023. For cash flow, we must compare between cumulative interim period with cumulative previous period. Therefore, the comparison will be between SOCHEF 6 months ending on 1st April to 30 September 2024 with 1st April to 30 September 2023. Same rules apply for SOCHI and we'll compare SOCHI on 1st April to 30 September 2024 with 1st April to 30 September 2023.
And these are our reference. That's it conclude our presentation. Thank you.